Welcome to the daily insights that matter. The direct investments in equities by retail investors has fallen in the current fiscal year from April to November 2022 when compared to the record levels seen in the same period in the last fiscal. Now, as per data from the NSE, retail inflow into NSE's cash or secondary market stood at a net 37,400 crores in the 8 months to November. Now, this is down by 64% from 1.04 lakh crores seen in the same period of the last fiscal year. Now, the net value is the difference between buying and selling of equities. Retail investors comprise of individual domestic investors, NRIs, proprietorship firms, and Hindu undivided families. Now, it is a well-known fact that the inflows seen in FY 2022 were at a record high due to the opportunities posed by the markets post the pandemic. Now, having said that, one part of the decline in retail flows into direct equities this year can be attributed to lower market returns along with a rally in stocks under-owned by them. Now, the benchmark Nifty rose just 7.4% in the April to November period against a 15.6% rise seen in the same period in FY 22. Now, another part of the decline can be attributed to the funds being allocated to equity options. Interestingly, data shows that while retail inflows into equity derivatives slowed to $248 billion in April to November from $451 billion seen in the year ago period, the flow into options rose from $177 billion last fiscal to $276 billion in this fiscal year till November end. Now, going forward with rising market volatility induced by monetary tightening amid persisting inflation, it could moderate the retail flows more in FY24. However, once the tightening eases, which by the way is on the cards because RBI's latest round of rate hikes mentioned that there might be a slowdown in the rate hikes, and once the volatility settles, retail inflows into equities are expected to improve. Now, according to a report by Anurok, housing sales in 7 Indian cities have set a new record in 2022, breaching the previous high of 2014. Around 3,64,000 units were sold in 2022 against 2,36,500 units sold in 2021 across top 7 cities, rising by 54% on a year-on-year basis. Now, the last peak was seen in 2014 when 3.43 lakh units were sold across the top 7 cities. Now, new launches across the top 7 cities also saw a 51% annual rise from 2,36,700 units in 2021 to nearly 3,57,600 units in 2022. While the Mumbai metropolitan region and NCR together were leading residential markets from a sales standpoint, Mumbai metropolitan region and Hyderabad witnessed the maximum new launches in 2022. Now, despite headwinds affecting the real estate market, including rising property prices, interest rate hikes, and the geopolitical tensions, 2022 saw housing sales in the top 7 cities breaching the previous highs of 2014. Going forward, we anticipate the current sales momentum in the housing sector to continue in the first quarter of the calendar year 2023. The desire to purchase a home has not diminished yet, with maximum sales being driven by the end users. However, various risks loom large around the residential segment, and a lot will depend on how the interest rates pan out over the next year. So what does all of this news mean for you? Direct retail inflows into equities have moderated after a record year of inflows. With the volatility settling, retail inflows into equities are expected to improve. This will therefore have a direct neutral impact on you. With healthy sales and a slew of new launches despite a high interest rate regime, the real estate market is expected to continue the momentum well into the early 2023. This will therefore have an indirect positive impact on you. While I say this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.